everyone, this is Anna Bruno, and I'm coming to you from New York, and today's topic will be how to minimize your financial stress. So what do we do? What can we do to minimize our taxes? And actually there are a lot of things that we can do. So we'll start with the basics. What are the basics? If you're working for a company, if you're working for a corporation, the first thing you want to do is obviously you want to take advantage of the employer provided retirement plans. There are different types of employer provided retirement plans. The biggest one, the most popular one, obviously, is a 401k plan, which comes in different flavors. There's the regular 401k, there's Roth 401k. There are other plans as well, depending on if you're working for a hospital or a educational institution. Those same retirement plans can come in different flavors, such as 457 plans, 403b plans, and so on. But my point being, you definitely want to take advantage of that because a lot of the companies actually offer a matching program. So for the first few percentage of your contribution, the company will actually match your contribution. So it's basically like free money. So who doesn't like free money? We all want free money. So even if you're thinking to yourself, you know what, I don't need to do this right now, I have other bills to pay, I really want you to think about the fact that you really want to make that contribution at least to the point of your company provided match, so at least you can get that. For those of you who haven't done it and you're thinking to yourself, okay, well, I didn't do my 401k contributions, I didn't sign up for it, what do I do? Not to worry, there are other things you can do. You can actually also set up an individual IRA, which is an individual retirement account that you set up where you can also contribute money to it, which will also will be tax deductible. And again, what's the point of doing all this? Why do we want to set up a retirement plan? Why do we want to do an IRA? Because those plans and the contributions to those plans are tax deductible. What do I mean by that? Let's just make up a number for easy calculation. Say you're making $100,000. If you put in $10,000 into your retirement plan, into your company provided retirement plan, or you put $6,000 into your IRA, what happens? $100,000 is the gross income. You will deduct the $10,000 that you contributed into the 401k. Now your taxable income will be calculated based on the $90,000, not the $100,000. And for every dollar that goes into that retirement plan, what's happening here? Not only you're saving money for yourself, but you're also reducing your tax burden. You're reducing the taxes that you would owe to the government. So something you definitely want to do. So that's like the first and foremost, that's the given that we all should be doing. We all should be taking advantage of those retirement plans. And as I said, retirement plans come in different flavors. If you're a small business owner, there are a lot of things that you can do. You can take advantage of SEP IRAs or simple IRAs or solo 401ks and so on and so forth. There are a lot of different things that you can do. As I said, and if you are not sure about what those are, you can always talk to your financial consultant. You can always talk to your financial advisor, and I'm sure they will be able to shed more light to all the different types of plans that there are, and you can actually start contributing and investing money into them. So that's tip number one. So that is something we want to do. The second thing, what else could we be doing when it comes to reducing our taxes? For those of you who have children, and for those of you whose children are young and you want your kids to go to college, one of the things that you can do is set up a college education plans, and which comes in the form of the name of those plans. The name is 529 plans. And why would you want to do that? Again, because there are some tax incentives that the government gives us in order for us to save money into those plans. And each state has different 529 plans. You can do your state provided 529 plan, but you don't have to. You can also do other 529 plans as well. And generally speaking, the monies that go into those 529 plans, you get, in some states, you will get a state tax credit for the contributions. But generally speaking, the money will go tax deferred, and the money will come out tax free as long as you're using the funds for higher education, which would include college tuition, which would include room and board fees, books, and so on and so forth. And again, this is something we all want to consider doing. as long as you have children, and as long as that's within your budget for your family. There are other things that we want to do as well to take advantage of deductions for on your tax return. So let's think about that and think about what it is that we want to do. Charitable contributions. If you could make a charitable donation, whether it's a donation in terms of or in form of a donating household goods, donating items that you already own, or even donating things such as stocks or bonds or anything else that's of value, you will get a deduction on your tax return. So that's something you'd want to definitely consider.